Breaking news coming in. Tata Steel has posted its numbers for the quarter gone by. In fact, consumer revenue of the company has come in at 56,218 crores versus what was being penciled in, which is 53,648 crores. So that is up 4.8% quarter on quarter. PAT for the company is also up 298.2%. So that's a whopping jump in PAT. It was being penciled in to come in at 1,301 crores. And that has moved up to 98.2%. The EBITDA margin for the company has risen again, 11.7% versus 11%. No, I beg your pardon, that hasn't risen. That has seen a bit of a dip. EBITDA, again, like I said, it's moved up 11.1%. Ladies and gentlemen, these are just a preliminary set of numbers. We'll, of course, be digging more into the fine print. But let's take a quick look at who's joining us now. Well, Aditya Walekar, Senior Research Analyst, Metals and Power and Axis Securities, is now joining us. Aditya, what's your initial impression of the numbers? We're yet to get the fine print of what these numbers really look like, which verticals have done well, which haven't really. But what do you make of the initial set of numbers that are trickling in?
Yeah, initial set looks broadly in line. So consolidated EBITDA of 6,559 and Bloomberg consensus was near about 6,600. So more or less in line. Tata Steel India standalone EBITDA is at 7,100, which has declined by 13% and 7%. So slightly lower numbers at standalone level. At Europe, the EBITDA loss is at 748 rupees crore. So that is almost flat on a sequential basis. The rest of the operations, the other trade-related operations, which were quite negative in Q3, that has come positive in this quarter. So on a consolidated level, the EBITDA and the margins are almost flat on a sequential basis. So I think on a consensus, more or less the numbers are in line with consensus, and there is not a major surprise as such we can see in the first impression is that.
Right. Aditya, but one major concern with respect to not just Tata Steel, but several other metals companies or, companies in this domain was the trade tariff war between between US and China. But now some headway has been made, at least a temporary trade deal has been signed. What do you anticipate for the company going forward?
Yes, so that headwind of the reciprocal tariffs between US and China today, so that is means that picture has got slightly cleared today. So both the countries have reduced their respective tariffs. So that is slightly positive, especially for steel prices, because if the tariffs were if they would have sustained at such high levels, then there was a risk of further dumping of steel from China. And if you see the latest Chinese steel exports in the month of April, that is still at a higher level of 10.5 million tons. So if the tariff at a higher levels would have continued, then the risk of dumping from China would have increased. And there is some relief with today's development on that front. Also, there is a 12% safeguard duty, which will protect the domestic steel prices. So although the upside to steel prices could be limited, but the downside is somewhat protected. So that will somehow help the domestic steel mills. And rightly so, the stock prices of most of the steel companies and metal companies have increased today with these developments.
All right.